Good morning, randos. Random Dave back again. It's Friday the 17th at 6:38. Got a reasonably early start this morning. See, markets opened up after pre-market sell-off. They tried to push up, and it's still selling down. So we're going to wait and see. We're pretty far from the EMA at the moment. Maybe there were some trading opportunities on the way down, especially this kind of double top thing, but we gotta wait till we get some signals near the EMA at this point. This is all, with trend trading, you could maybe jump in, but you never know when it's going to catch a bid and reverse on you. So I'm going to hold off and give it a little time to play out, and then see what we can put together for today. So we did buy back up a bit we finally kind of caught a bid here, ran it up close to the EMA. And then, of course, considering this trend has been very bearish, sellers piled back in, pushing it down for what we'd call a first attempt to go short.
Iceberg ES sell. Absorption buyers ES.
And pushed it short. Now let's see what happens. But this big trend break, we would expect a new low. It may or may not get it. We may end up with a higher low. So we wait and let the price action tell us what it's doing. Whenever I see these kind of wicks forming, I usually expect the next candle to try and trace that wick to some degree. And it is doing that. And then we see what happens next. But first attempt to go long, first attempt to go short. We're counting from this swing low right here. So this whole leg is the first attempt to go long in my read on it, and then whatever this down leg will be, and then another leg up, 2-leg pullback, and then the second attempt to go short if it's below the EMA, and it looks like we got good signals, candles look good, then we can expect attempt at the new low. It doesn't have to make 2 legs back to do that, but it can and often does. Just going to draw a little arrow here and kind of get an idea. Pretty big leg. If it's going to be a down day today, our target is below 4,500 for 2 legs measured move. And again, that may or may not happen. So yeah, we're watching now that we're a little bit closer to the EMA and we had a break of the trend channel. We expect pullback and then a new low to form. If that doesn't happen, that is a signal to us to keep our eyes peeled for a change in the sentiment. So let's wait and see how it plays out. Where's my box? Where's my box? High 1925, 1925. So these are all matching highs. A tick above would count as the second attempt to go long. A tick above that 1925, 45, 1925. And we didn't get that. So first, we're still in the first attempt to go short after the swing. we would like, in these kinds of scenarios, a second attempt to go long, get close to the EMA and fail, and set up our short, second entry short, which we could take expecting a new low. So there it is. First entry long, second entry long. This was the first attempt to go short in between those two. So we're looking at it to get close to the EMA and fail, which there it hit the EMA. First attempt, second attempt long. Now the second attempt to long may succeed, now it's really pushing. But we're around the EMA, we're expecting a failure for that to continue in order for us to sell short. Now, sometimes the market likes to push up above the EMA to get these breakout people to buy in, trap them. And now we're looking potentially that we have our short here. Got a few more candles to wait for. A few more ticks to wait for before this candle closes. And to see if it'll confirm. Now it could trap us to the short side too. A failed second entry short could turn on us. But, we just got to wait and see. So there it was. It ticked down below. It's trying to pull back up. And we're going to see if that is a short trap or a long trap. And I feel like
Order
this is
filled.
a good spot right now. I tried to pull back up a bit and push. So I'm hoping that that was the end of the buying, and we're going to break down and get our new low here, which maybe we'll put around 1350. I was hoping it would happen sooner, more quickly. There would be no buying. Go down, baby. Drop. Drop it like it's hot. Drop it like it's hot. Okay, we're in it. We did get a slightly favorable entry, but yeah, I don't know if I'll get it or not. I see some support there below. We would really have to push that. This whole move could be done down here, and it's reversing. It's certainly possible. We're 1 point in, 1 1/4, 1 1/2. Let's go down, baby. Let's hit it. Push. Push, push,
Target
push.
filled.
Target filled. I gotta go to break even +1, sadly. It's not doing it automatically, but that's okay. Come on, sell, baby. Rats. It's gonna come back. It's very efficient in taking out people's
Stop filled.
runners. So that was right to the tick. They got me. But we got a winner based on our prediction that it was going to trap people long. We had 2 legs, and that second attempt to go long failed, and we took it, and we got our 2-point scalp out of it. And just as is par for the course these days, runner got taken out right to the tick. Uncanny. And it may continue to run down and make those new lows. Yeah, one more tick entry into this previous candle body, would have been nice, but yeah, we'll see. If it continues pushing up, then we're seeing this low, higher low, slightly higher low, and it may want to march out and, reverse this whole sell-off. But I have to say I feel pretty good about this scalp trade. And yeah, I got out at a pretty good spot. Wasn't a huge move, but it was enough to get the scalp. That's why a 4-tick scalp is definitely nicer, but with the MES and just 4 contracts, you're not making a lot of money on each trade. So yeah, look at this. We did get pretty much most of that pullback there. First entry long, second entry long. It's now attempting to go long again, hitting the EMA. And yeah, if this is, the sign of a change in sentiment, we're witnessing it now. Because take a look here. This is only the only potential negative I could see about this area that I took my trade. I will draw a rectangle to show that it's congestion area. These candles, they're all, for the most part, overlapping each other. So it's like a mini trading range. So it broke out through the top and failed out down to the other side. It didn't break through the bottom. But yeah, even additionally, these breakouts of ranges tend to fail, and it did here. Now we're breaking out again on the upper end. Second try may be the charm for the bulls to push through. So we wait and see what happens. There are traders that might be fading this move back down again because we never got our new low of the break of the trend channel. But for me, this kind of counts as a swing high. First entry short, first attempts to go short. Now we're back in first attempts to go long. If it breaks this candle here, then I will restart my count, as that will be the new kind of swing high of the move. So it's really trying to break out of this little range that I drew. And we'll see who's in control. They're really trying to soak up these sell orders. And let's go to Bookmap real quick. You can see there's some pressure up above, some resistance here. And they're starting to load it, trying to force it down. So yeah, they're forcing it down again. I don't know if I want to take this or not. I mean, it's
Order
such a
filled.
bearish look that it could be a trap. Could be a trap for us. But let's see if we can get down to the bottom of this range here. Ooh, gosh. Yeah, I may be the one trapped here because all that pressure kind of evaporated a bit, and they're starting to move things up. So, I'm based on price action, I'm still expecting new lows of the day here. Oh man, this could be double trap time. It's tough trading in the range, and I got in right in the middle, which is a big no-no. So I may have to take some heat. Yikes, that's a big reverse. That's a big reverse. I'm gonna do what I'm not supposed to do here. Gave back all my profits already. Double trap. Let's hope it doesn't hold, but it may. It may hold there. I think that was maybe some distribution. Excuse me, maybe the accumulation is occurring in here, and now people have a second entry long if they want to read it that way. First, second. Ay, ay, yo. Come on, sellers, get back on that one. Well, they definitely are dumping it. Come on now, triple test. Push down. Let's go. Massive move. Massive sell off. Let's go soak up these buyers. Yeah, good man. Or woman, or it, or AI. Algo. Come on, Algo. Algo to the bottom. Wow. Wow. That definitely caught a bid at the bottom of this range. We're really hoping that pushes hard. We really shouldn't be getting support till 14s. Maybe I should just take my runner. Well, I'll just leave it at my target. Oh, come on, you. Come on, you. It's not bottom range. Oh, yeah. Don't do that. Action bombs. Red. Action. That's not. That's four. There's four. Now we can get shots. Dang that. Sell it. There you go. Go down.
Target filled.
Yes. Thank you for being here to witness that. Break even plus a tick and
Stop
stop
filled.
filled. That's just how we have to do it. But this is actually a pretty common pattern. Often you'll see actually the tick higher by a little bit to trap longs on this kind of distribution mode, and then it will dump. So they bid it up, get people to buy their contracts. So they're distributing their contracts to buyers who think it's time to go long, and then they sell it off and buy them back cheaper. So yeah, this would be like a distribution area, distributing to weak hands and people who are tricked, and then they bid it down, trap those people who have to sell for a loss back to them so that they can run it up again. So right now we're still at a higher low. We never broke this low here. And maybe all the people had to dump out of fear and stop losses and Let's see the buyers jump back in, getting all these cheap contracts, and now they can run it up. All right, we're dancing around. They call these railroad tracks, but they're more like railroad ties. If you look at the railroad, the wooden pieces that go from side to side across the tracks are railroad ties. They tie the tracks together. And this is like the train track here and here, and the ties are in between them. So maybe they call them railroad tracks just because they're parallel lines like a railroad track. I don't know. They look like railroad ties. I used to work on the railroad, so I would know firsthand. So one thing I wanted to point out is the flattening of this yellow EMA, which is a 21 period EMA, 21 bar EMA. It's flattening out. So that's definitely a sign that we're not in trend anymore. We're in range. And this is when you want to be very careful. I took a trade here while the EMA was flat, and you could see that was a riskier type of trade. We still had a downtrend on the EMA when I took my first trade, and I caught the tail end of it before it really started to get flat. So that one I didn't take as much heat. So I think there's something to that idea of, what's the EMA doing? What's the average price? Also, this is the pivot point on these bars that I have set up. They're Fibonacci, retracement bars. And so this is kind of the pivot point for today. Things pivot above and below. So these are signs of, retracing up towards previous highs or pulling down towards lows. And in general, when it's in these S3, R3 zone, it's really either pretty overbought or oversold. And they don't tend to stay around there for too long, although they can. But yeah, that's just kind of what I'm looking at here. And these are just previous highs and previous low lines. So, yep, we got a new swing high here. First attempt to go short. It's trying to go long. I've seen people count this as a first attempt to go long because it's pushed up above the close of this red candle. So people might say, oh, first attempt to go short, first attempt to go long. But the way I've been kind of doing it is it needs to break the wick too. So full on, long attempt. So I guess I would say then we'll call this a signal that yes, they're trying to go long, and then our entry bar would be the one that actually does break through. So if it does break these highs here, then we could say second attempt to go long. It would be successful, and then we'd push out. But again, the EMA is relatively flat. It's starting to creep up. So we need to accumulate a little more data to get our premise here. But again, these are all stacked on top of each other. All these bars here is just congestion. Buyers and sellers are kind of at a happy medium, if you will. They're auctioning and they're in relative agreement on price between 20 and 23.75. So one side's going to win eventually. Buyers will say, you know what, I'm not interested anymore. Sellers will say, I'm not interested anymore. And that will allow the push up or push down. Whoever gives up says it's not a good deal any longer. So that's my understanding of how this all works. And yeah, it ticked up, but we're in a congestion zone and it would be risky. It's like I was mentioning here, this is not trend, this is range. And so on ranges, you don't necessarily want to take these second entries. You want to sell at the top and buy at the bottom, just like the big guys are doing. Fade these, breakouts of ranges. If you would have recognized the range on these four candles here, you see this breakout, you'd be selling, just like all these other smart people here. And then it kind of broke out through the bottom, and then these smart people here bought, and now they're dumping to the sellers. They're just trading hands. So there's a lot of money being made in this zone here with the smart buyers and sellers recognizing the range. Now, a lot of selling. They're pushing out through the bottom of this range. It may succeed, it may not. First attempt to go short, tried to go long. Second attempt to go short is how you would read it, but the overall picture is flat EMA, stacked up candles, congestion zone, aka trading range. And we could just take a look at maybe a 15-minute, and it's very clear that they're just stacked up. 2 minutes, everything's all stacked up with doji type candles here with high wicks above and below. So that's all signs of range trading. And I'm not typically a range trader. So even our previous range, if we were to extend it out a little bit, oh, interesting, right? Now we could maybe see that there's a bigger range in play, and our EMA is the midpoint of that range. So you just gotta really open your eyes to patterns and see what's going on. But I feel bad for all those people getting chopped up right now. If you're watching, hopefully this info will help you out. And try to recognize range trading real soon, because you're going to be wanting to buy these breakouts and you're going to get clobbered, and then you're going to get taken out and you're going to be like, oh, it's going short, and then you're going to get reversed on. And it's happened to me enough times that I just said enough is enough. And I'm predicting in the future it may happen again if I get too confident and think I know what I'm doing. Then the market will hand me an expensive lesson. But here we go, bottom of that the upper range here, and they're buying. Or you could say it's bouncing off the midpoint of the range at this pivot point. Yeah, so just be careful. Even breaking out, you got to watch out. So the lesson here would be, let's say this is the upper end of our range, or let's pull this down and call this the range, and see this breakout here. You want to see a pullback, hit the top of the range, and then a push up. Breakout, pullback, test, fails to go back in the range, and then you could think about going long. Don't buy the breakout. Break out the pullback, failed test to push back in. Same on the bottom side. Breakout, pull back in. If it hit the lower end of our range and couldn't push in and started going short again, then you would say maybe it's a chance to take, because they're going to make everything look very tempting in here. And we could even see a full-on doji in this area. So just no confidence in trading this unless you're a range trader and you know what you're doing, like fading breakouts and whatnot. So it's the upper half of the range. It's not breaking out. So the sellers are pushing things down to the lower half of the range. definitely caught some buyers in there, fading the breakout of the upper half. But I personally will not be doing that because I still see there's still range through the bottom here. Plus, we never, well, maybe this is the opportunity. It's all guessing. Nobody knows what the market's going to do. I really, I used to think, oh, they're after me and stuff. That happens probably in the overnight sessions when there's very thin volume and people can manipulate the price much more easily. They might be able to see your stop losses and take you out. But during the day, any individual like us regular trader folk, they're not after our dinky number of contracts. These are big firms trying to take each other's money. We just want to be on the right side of their moves. I want to take a look here. So we got some volume on that last candle on the 2 minute. You can see it's a little higher than it was. So that could be a sign that it's a decent push, to the low side. But it's all still pretty much overlapping in my eyes. I don't think even we had any real good signals here. Off the high, attempt to go low, attempt to go long. Yeah, I guess you could maybe say that's a second attempt to go short. Failed second attempt to go long and second entry short. Coming down. So remember this little shape here. Let's kind of imagine it in a bigger picture because I mentioned how the second surge up can sometimes come higher than the previous, and people think it's time to break out, and then they sell on you. Well, let's look at this as like a bigger, view in this whole thing, just for illustration purposes. We have this bump, and then this bump is a little higher, gets people wanting to buy in, especially you see this very strong move, and then they dump on you. So they're selling you all their contracts, and you're like thinking, hey, it's going to break out, I'm going to reach the highs of the day, and then they dump on you and buy them back from you later at cheaper prices. I've seen that happen far too often. But I'm not saying that's exactly the situation here, but this is a pattern to watch out for. And I think I've got that from looking at, and I'm no expert, but there's a Wyckoff, Wyckoff, trading pattern, series of patterns. He had a whole school of, you know, chart patterns. He's one of those old school dudes from 100 years ago, something like that, maybe more. And people still study him today for his kind of market theory and chart theory. And I see definitely validity. He talks about accumulation and distribution, in these kinds of ranges and, how to read it. And there's always these impulses to one direction or another. Don't be fooled. That's just how the market likes to work and how the people behind the scenes, the big players, how they operate. They're selling and buying thousands and thousands of shares, tens of thousands, millions of dollars, and more. And they can't all buy at once because if they did, the price would run away from them and they wouldn't get a good deal because they have clients that they have to buy for. So they know how to chip away, you know, uh, average in onto their buys over longer periods of time. If you look at like daily charts, you'll see areas like coming off here, like, oh, it's a good time to buy, so they'll be buying in, they'll wait for it to pull back, buying in, wait for it to pull back, buying in. They're very patient and they have long-term views on things, so they let the markets work for them. So we have to be aware of that, and I'm sure there's a bit of that kind of stuff going on right in here because this looks very familiar from how that kind of situation works. So the alternate way of looking at this, again, I'm not very good at understanding the accumulation and distribution. Usually, the way I see it is you're accumulating at the lows and distributing at the highs. But it could be that they're just trying to distribute because they know it's coming back. So they want to get even better prices. So they might be trying to trick people to buy at the wrong time. And they're more than willing to put in a bunch of sell orders to push it down and then let momentum carry it the rest of the way. And those sell orders that they pushed in um, are not enough to offset any gains they would have from buying back in even lower and getting a huge run. That's like the cost of doing business. So they're willing to take some little percent loss to make massive percent gains on the big runs. So you got to give a little to get a little, but they're giving a little to get a lot. So yeah, I'm learning to try and think like those big money operations operate, and hopefully I can be on the right side and just take my little salary. I'm in no way in a position to be trying to make millions of dollars in a handful of trades. That that'll come later when I have a war chest built up and I can expand it. Right now I'm just trying to pass a stinking eval here. So, but these are things that I've learned and hopefully will be helpful to some of you out there. Yeah, no sooner did I, just explain how we shouldn't be trading in here. I saw these lower highs forming, and I'm like, man, that's right at the EMA. If it breaks down here, it could go really short. And I almost jumped in. But I really have to restrain myself because I'd be taking heat at the moment. I don't know if the trade would work out or not, but gosh, I just wanted to jump in. Just like, you know, a dog sees a rabbit run by and he can't help himself. Just wanted to jump in on it, but see it ticked down below that candle and it's buying back up. So you gotta watch out. Patience. I have a quote that I heard. Patience is bitter, but its fruit is sweet. So that's what we have to stick to. Well, would you look at that? Good thing I didn't jump in. That was definitely a trappy move. And now it's rocketing up above the EMA, taking out stop losses above this swing, this candle high. So maybe they said, okay, we got enough people's stops taken out and, we'll run it up. I don't know. Just trying to talk my way through each candle I see. But there's just nothing worth trading in here. I only have about 15 minutes before I leave for work. Well, I have about 9 more minutes or so before I'm out of here for the day. And it's just been range bound. Today is OPEX Friday, so options expiration Friday. And think with Bookmap chat, somebody mentioned that, let's see, who was that? He goes by Space Shark 007, mentioned that they're price pinning, which was a, I think, pretty good observation. Good explanation as anything. You know, they're just trying to keep the prices where they want for these options. I presume that's what price pinning means. It's a new term to me, but makes as much sense as anything I've come up with. So there's always some big picture that helps explain things.
Stop ES buy.
Sometimes that big picture is there is no picture. It's just how the market goes. They're not always colluding. Sometimes they're on opposite sides, trying to take each other's money. Business is war. Something like that. Well, folks, it is the 8 o'clock hour here on the West Coast, and I am going to wrap it up, head off to work. Friday. It's a good day. It's a good day for work, but bad because the markets will be closed over the weekend. And then we have a short week next week due to the Thanksgiving holiday. I hope y'all can spend it with good people of your life. Relationships are number one thing that helps with longevity, according to some new studies. But I digress. Yeah, had I been a range trader, which I guess I was in this area here, but recognizing the range and trading the breakouts or the upper and lower, I could have made a pretty tidy sum. But I didn't do that. Just don't want to risk anything. Just take the trades that I'm comfortable with and not force the issue. So I gotta call it a day here. We'll see what plays out. Hope your trading is good, and have a good weekend. Random Dave is out of here.